Yeah, absolutely. I mean, their unit sales were pretty much flat year on year. There was a slight reduction in the inventory they had in the channel, and if you exclude that effect, Apple talked about mid-single digit growth over the cycle in the iPhone, so it is actually growing. But what's been a real standout this year has been that 20% price increase, as the X has proved, the 10 has proved to be the most popular iPhone, still the most popular iPhone, and has really driven up their numbers this year.
It's quite an upsell to consumers, isn't it, Arjun? You consider about 20% growth in the average selling prices that the X has helped the company achieve. Is there a story behind the 10 and what that says about future devices for Apple?
Yeah, I think they've clearly shown there's a market for these ultra premium devices, and there were a lot of concerns actually going in when the iPhone 10 was released that actually the $1,000 price tag was going to put off a lot of people. And while it may have not been a kind of huge volume seller, it certainly did a huge deal for the average selling price of the devices, for the revenues. We saw just 1% uptick in unit sales this quarter, but the 20% revenue rise, and that's quite important. And of course, we can't forget the continued growth of the iPhone, but the services division as well on the side, and that's really important. That grew again at 31% for the second quarter in a row, and that's just becoming ever more crucial for Apple to try and wean itself off sole reliance on the iPhone, especially as those smartphone markets do continue to slow down on the hardware side.
Apple ticked many boxes, I thought, in the results yesterday, even when it came to the iPad. You saw some decent numbers crossing for that device. But where there might have been some concerns around China, Greater China performance in the quarter was a little bit weak, higher year on year, but on the quarter it came through a little bit weak. Add that in context to a trade war that's being waged by the US president. The fact that Huawei, a manufacturer in the region, has managed to move past Apple in terms of market share in the latest industry figures. Does that tell us that the China market is going to be much harder for Apple from here?
I mean, in terms of the emerging markets, Apple has a much tougher battle. As Arjun talks out around, they're masters at selling the $1,000 phone to wealthy consumers in the US and Europe. In China and India, the wealthy citizens have already bought those phones. The real growth that is coming is much further down the income classes. So Apple needs to adjust, and there it finds, very, very difficult competitors in Huawei's, as you mentioned, Oppo. There's a whole raft of very compelling phones. Xiaomi's another one around the $500, $600 point. So it's much, much more competitive. But all the data we have is at that high end, Apple is retaining mindset share. It has incredible retention rates. It's doing very, very well.
James, I wanted to get a question in on how you look at the Apple stock story, because a lot of people have said, well, this is a hardware company, but now what we're really seeing is that recurring revenue model really start to gather steam. And so when you look at where Apple is valued in terms of its forward PE, it's at 14 times, but you look at something like a Google, which has that recurring ad business, that's at somewhere like 27 times. So do we see, on the back of this continued success in services and the stability of iPhone sales, a re-rating of Apple's valuation higher?
I think over time you could see that. By my estimates, I think the services business is probably contributing perhaps as much as a third of the profits now. It's a little hard to tell, but it's a meaningful contributor. What we have to remember is it's all tied to the iPhone sales. Apple doesn't get the services revenues if it doesn't sell the iPhones. So its multiple is tied to the fact that the hardware is still the keys. The services is a great, growing, profitable business. I think it does change the outlook for Apple, and it will help the re-rating, but I only expect a marginal help from it, because at its core, it still has to sell phones.
What about our other capital side? Because we've got to move after hours in the stock, and some of it also comes down to what is a fairly grown-up approach to investors and the capital allocation. 100 billion share repurchase program that was announced back in May. Company returned about $25 billion to investors this quarter. It's not a bad payout for someone looking for that cash back from the company.
Yeah, I think it's going to be a very reliable source for that. Apple's net cash balance peaked at around $170 billion. They're generating around $50 billion in proper free cash flow each year. And what we now have from Apple is a commitment to not just pay out all of that cash flow as buybacks and dividends, which they had been doing before, but actually to reduce that net cash balance to a neutral position. So year over year, we've seen that balance already drop by about $30 billion, and we can continue to expect them to do that over the years. So that will really support the income investors to an extent. More of it I expect to go into buybacks. I think this will help the company generate what should be around double-digit earnings growth for the next few years. Half of that probably comes from the business, half of it comes from the buybacks.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.